Welcome to Sam Bankman-Fried's incredible clown show. Just when you thought this story couldn't get any weirder, it just got weirder. This week, Sam Bankman-Fried, the disgraced head of FTX, which basically collapsed several weeks ago, he took the bizarre story one step further by hitting the interview circuit. Yes, this week he hit the interview circuit with CNBC's Andrew Ross Sorkin and also ABC's George Stephanopoulos. What we're going to do in this video is I am going to take a look at some of these clips and I'm going to respond to them as an investor, as a former investment banker. And if you get value out of this, please like and subscribe. It helps the channel, and I appreciate your comments also. All right, so the amazing thing about this story before we get into it is that this guy, and when you look at him, I mean, he's got the crazy hair, he's lisping, he's got the t-shirt on, he's got the man boobs. He is completely devoid of any charisma, any personality, or anything about his personality or presentation that would lead you to believe that you would have confidence in this guy. So how is it that some of the most sophisticated investors and some of the largest investors on the planet got suckered in by this guy? I just do not understand it. It's completely mystifying to me, but we'll examine that further in this video. The likes of Mr. Wonderful from Shark Tank, for example, BlackRock, for Christ's sake, Tiger Global, Ontario Teachers Funds. These are some of the largest and supposedly most sophisticated investors on the planet, and they all got taken in by this guy, and it's rather unbelievable. So with that, let's start the clips, and I'll respond as we go through.
There's a generous view, and the generous view is that you are a young man who made a series of terrible, very, very bad decisions. The less generous view is that you have committed a massive fraud, that this is a Ponzi scheme, a manipulation of the system. And I want to start there because I think that there are so many people who have that question, which is, what is this? And what did happen?
Yeah, look, thanks for having me.
Thanks for having me.
That means whatever happened. And at the end of the day, I was CEO of FTX. And that means whatever happened, wherever it happened, I had a duty. I had a duty to all of our stakeholders, to our customers.
Look at this
our
guy.
creditors. I had a duty to our employees, to our investors, and to the regulators in the world to do right by them, to make sure the right things happen.
Yeah, you didn't do a good job of that.
Clearly, I didn't do a good job of that. Clearly, I made a lot of mistakes or things I would give anything to be able to do over again. I didn't ever try to commit fraud on anyone. I was excited about the prospects of FTX a month ago. I saw it as a thriving, growing business. I was shocked by what happened this month. And, reconstructing it, where there are things I wish I had done differently.
Well, let's talk about some of the things you would want to have done differently. But I don't want this to be an abstraction for folks, because it's a lot of big numbers and often doesn't feel human. One of the letters I got, I want to read to you, Sam, because it's from a gentleman who said that he lost his life savings. And the subject line is, Sam Bankman-Fried stole $2 million from me. It says, Andrew, can you please ask SBF why he decided to steal my life savings and the $10 billion more from customers to give to his hedge fund, Alameda? Can you ask him why his hedge fund was leveraging long all of these S coins? I'm going to keep it polite.
Look at him smile. Look at him smile.
Please ask him if he
idiot.
thinks what happened was fraud. These are the kinds of letters that I've been getting repeatedly over the past several days. What do you tell this man?
Yeah. I mean, I'm deeply sorry about what happened. Here's, the long and short of what happened. And I'll start by saying, just to make a distinction here, you look at the U.S. platform, you look at the international platform. The U.S. platform is a U.S. regulated platform with American users. To my knowledge, that's fully solvent. That's fully funded. And, I believe that withdrawals could be opened up today and everyone could be made whole from that none of these problems plagued the U.S. platform. Then you look at the international platform, for their non-U.S. users. And, as the letter says, Alameda Research did have a long position. And the international platform, it's a margin trading platform. It's a derivatives platform. It's a platform where all the clients were, going on, placing something as collateral and using that to put on a position, whether that's a futures position, a spot position, a borrow. And what the exchange was storing was the collateral from all of those positions. Alameda Research was, one of those that put on positions there. And as I try and reconstruct this, over the last month, I have limited access to data, but my view of it, from what I have been able to see, is roughly that, basically, look, a year ago, Alameda had, I think, something like 10% leverage, had something like 10 times the assets of the position that it had on. Over the course of the last year, there were a number of market crashes that drove the value of those assets down and the leverage up. I think it was, to my knowledge, still under 2x leverage, as of a month ago. You look at what happened this month, and in a few days, all out, PR assault, which led to a total market collapse in a pretty short period of time, no bid side liquidity. I think more than $10 billion wiped off in the matter of days.
Okay, so first of all, he didn't answer the question. He goes off into this rambling diatribe about, the international and the U.S. and all this garbage. I don't know if he's on something or what is going on here, but he clearly didn't answer the question, and he's just basically saying nothing, okay, except I'm sorry, I'm truly sorry. And did you see when he was smiling there? When the guy said, S coins, he smiles. I mean, what are you kidding me? Okay, my overall question is, why is he even doing this? Why is he not in jail? Okay, why is he allowed to go first on CNBC and then on ABC and hit the interview circuit like this? Okay, under what universe does this happen in? Okay, this guy should be in jail. Did Bernie Madoff have the opportunity to go around to all the different networks and spew his garbage for why he did the Ponzi scheme? No, he went straight to jail. Now, why is this guy still walking around and being given a platform to spew his garbage and pablum? Okay, pablum. That's an interesting word. What does that mean? Oh, that's what it means. Okay. I guess Greg used it in the right context. But I don't know. This gets me really worked up. But let's continue watching.
But I think the bigger question is where Alameda got the loan from, which is to say that there is a view that this is about commingling of funds. Right. And in that letter that I just read you, this gentleman actually copy and pasted the terms of service for FTX into the email. And I just want to read you this. It says, none of the digital assets in your account are the property of or shall or may be loaned to FTX Trading. FTX Trading does not represent or treat digital assets in users' accounts as belonging to FTX Trading. So how is it possible that Alameda had this loan of such a large size?
So there's that piece from the terms of service, but there were a number of other parts of the terms of service and a number of other parts of the platform on top of that. There is the borrow lending facility, where users were lending billions of dollars of assets to each other, collateralized by assets on the exchange. You had obviously futures contracts where there are leveraged positions on. Now, of course, all of this, it's meant to be the case that these are positions where FTX could, if it needed to, margin call those positions and close them down in time such that it would cover all of those, all those shorts, all those liabilities. Obviously, that wasn't the case here, and that's a massive failure of oversight, of risk management, and of diffusion of responsibility from myself running FTX.
Okay, again, obfuscation, not answering the question directly, throwing out all this gobbledygook that nobody understands. He asked a simple question. How could Alameda get a loan of that size? He asked a simple question. You did not get a simple answer. This guy is completely full of it. He should be arrested, he should be convicted, and he should go away to jail for a very long time. This is complete BS here. Shame on CNBC for giving him this forum, and shame on ABC for doing it afterwards. And we'll get to ABC in a minute. Let's watch the rest of this.
Just make this very straight. Was there commingling of funds? That's what it appears like. It appears like there's been a genuine commingling of the funds that are of FTX customers that were not supposed to be commingled with your separate firm.
I didn't knowingly commingle funds.
Whoa. Wait a minute. I didn't knowingly commingle funds? So if funds were commingled, how could you be the CEO of a company and not know that you're commingling funds? That's complete BS.
And again, one piece of this, you have the margin trading. You have, customers borrowing from each other. Alameda is one of those. I was frankly surprised by how big Alameda's position was, which points to another failure of oversight on my part, and failure to appoint someone to be chiefly in charge of that. But I wasn't trying to commingle funds.
Okay, wait a minute. He's the CEO of a company and he doesn't know how big his positions are? I mean, according to what I've read, these were enormous positions, massive positions. There's no possible way he couldn't have known how big the positions were. And saying, oh, I should have hired somebody to oversee the risk management. I mean, come on. This is like, what do you think? We're freaking children here? This went out to like the whole world on CNBC. This is crazy, okay? I'm going to talk about the legal side of it at the end, but, how a guy does this from a legal standpoint, comes on TV when you know he's going to get prosecuted at some point, that to me is completely unbelievable. But anyway, let's watch the rest of it.
Let me ask you this. The Wall Street Journal reported that Carolyn Ellison told Alameda staffers that Alameda used FTX client funds to cover loans that were being recalled because of the Luna-triggered credit crunch. Carolyn says that she, Sam, Gary were aware of this. How do you square that with what you originally said over Twitter, that this was an $8 billion accounting mistake?
So I'll point to two things. And first of all, obviously, I don't know what anyone else is thinking here. I can only talk about it from what I know, from what I knew. And a lot of this is reconstructing it over the last month. I have limited access to data. But what it seems like happened is in the middle of the year, a lot of, most of the borrow lending desks in the space blew out or closed down. And it seems like Alameda had, margin positions opened with them, and that it likely moved a bunch of that over to FTX this year when they shut down. And that means, I think it was over collateralized positions, but positions that involve substantial size and substantial US dollar size. on the borrow side. In terms of the accounting mistake, again, looking through what happened, I think that there is a substantial discrepancy between what the financials were, what the audited financials were, the true financials, what the exchange understood. All of that was consistent, versus what the dashboards that we had displayed for Alameda's account there, which substantially under-displayed the size of that position. And so that's one of the reasons that I was surprised when we dug into everything at how big that position had become.
Okay, so now he's saying, again, he doesn't know how big the position is, which is basically saying, A, I'm incompetent, B, I'm irresponsible, and C, I'm culpable. Okay? He's really doing himself a lot of favors with these interviews, let me tell you. All right, now let's go over to the ABC. We'll take just a brief look at that, and then I'll have my commentary at the end, so stick around.
One of the reasons FTX went bankrupt is because FTX deposits were used to pay Alameda's creditors. Carolyn Ellison said you knew about that. Is that true?
You know, best I can tell, Alameda did have a big position open.
Best I can tell? Give me a break. You got to be kidding me.
On FTX. That position, I think, was, you know, very over collateralized a year ago. There was a total market collapse, and you know, specifically a large correlated collapse in its assets, you know, over the last month, and to some extent over the last year, that you know, threatened that position quite a bit. And I think that's, you know, as best I understand, a lot of what happened there.
I am no cryptocurrency expert, I'm no finance expert, but I don't think you answered my question. I was asking, did you know that FTX deposits were used to pay off Alameda creditors?
I don't know of FTX deposits being used to pay off Alameda creditors.
Okay, he's lying right there. He's got to be lying, or he is a complete idiot. Okay? I didn't know if the funds were used to pay off creditors. Is that what that's what he's saying? He was so on top of the situation of being CEO of this company that he didn't know that deposits were being used to pay off Alameda creditors? Are you kidding me? This is complete BS, and it's got to be a lie. That's all I have to say.
Are you, which creditors are you referring to?
Carolyn Ellison said that you all knew that these funds were put into Alameda. They were the funds owned by your depositors. But as you know, the FTX terms of service tell the people who signed up, none of the digital assets in your account are the property of, or shall be, or may be loaned to FTX trading. But you're saying that happened.
There existed a borrow lending facility on FTX. And I think that's probably covered, I don't remember exactly where, but somewhere else in the terms of service.
But they'd have to approve of that. They're saying they didn't approve of it here. They're saying you approved of it. I do want to move on, but just finally on this. This is really a yes or no question. Carolyn Ellison says you knew that FTX funds were being funneled to Alameda. Did you know that?
I knew that there is an open margin position there, and that involved
I know, but that's not what I'm
borrow.
asking. If she's in court and you're in court and she's under oath and you're under oath and you're asked, did you know that these funds were being funneled to Alameda, what is your answer?
I did not know that there is any improper use of customer funds.
Okay, I've seen enough of this. I was vaguely aware that that was going on, vaguely aware. I mean, this is an example of not only a Ponzi scheme, but a gigantic deception where investors were deceived of the value in both entities. Not mentioned in any of these interviews is that he created a coin called FTT, and then he pumped up the price by promoting it to the public, and also by buying it himself through funds that were raised in these two entities. How he did that, I don't know, and I don't think anybody knows at this point. But that is called a pump and dump scheme. Okay? So when he says that there was this tremendous correlated decline of assets, what he's basically saying is that everyone discovered that FTT was worthless. And I did a video a few weeks ago, which I'll put in the end screen of this video, where it talks about the proposal that Binance made to rescue FTX. And the founder of Binance discovered that these many of the assets were held in these FTT coins, which were basically fallacious, and he started to sell them. And when word got out in the market that he was selling them, that's when the entire thing collapsed, because these FTT tokens were basically worthless. That is the crux of the Ponzi scheme here, and that is the real truth behind what has happened here. Of course, it's much more complicated than that, but basically that's fundamentally what happened. Now, another thing that hits me, just to show how horrible this guy's judgment is that from a legal standpoint, he's basically going on these networks and he's giving these interviews, and he's basically indicting himself, admitting to things here and things there that can be held against him when he's finally taken to court. And from a legal standpoint, it's one of the stupidest things I've ever seen in my life. I'm not a lawyer, but you don't have to be a lawyer to understand that. So, in summary, this is a Ponzi scheme perpetrated by a snake oil salesman whose demeanor and explanation is just full of holes. To me, I don't see how anyone could have been impressed by this guy in a meeting where he comes across like completely unimpressive, and he doesn't inspire confidence at all in the way he speaks, the way he presents himself, the way he looks. Like, you know, I don't like to just judge somebody by the way they look, but, you know, I mean, give me a break. How could these sophisticated investors have fallen for this? Well, goes back to P.T. Barnum, who said famously, there's a sucker born every minute. All right, so this is Greg. Thanks for watching. I hope you got some value out of this. It's really an incredible story, and I'm aware there's a lot of videos on YouTube and elsewhere. There's, you know, this situation is in the news constantly, so you can get the information on that from plenty of other sources. But I appreciate you watching the channel and for looking at these clips with me and listening to my responses to them. If you got value out of this, please like and subscribe. And I'd love to have you on board for future videos, which will be coming your way very soon.